Good morning, good evening, good afternoon. How are you guys doing? Good day to you. I hope you guys are good. I hope you guys are good. Welcome to yet another episode of the Boss Forex channel. Don't forget to click subscribe and leave a comment on the comment section. If you need any clarity on anything, let us know what video we can do for you. There's something you don't understand, let us know in the comment section, and then we'll help you understand and break it down for you. And yeah, today's topic is it's gonna be very brief and exciting. There's, I guess you know that there are three times you need not to be trading, right? If there is a holiday in the US, if there is a holiday in the US or in America, you are not supposed to be trading. Why? Because not became, but because the volume is very low. The volume and liquidity in the market is very low, and liquidity in the market it's very what very low, very low. What do we say by that? If there is less people in the market trading, and I guess by volume you know that most of the trillions that circulate in the market are from US companies, like those big companies like your JP Markets, not JP Markets, what am I saying? JP Morgan, your JP Morgan, your Citibanks, all those big multinationals, your Coca-Colas, your Teslas, and things like that. When it's a holiday in the US, there's less volume in the market. So what that means is it's difficult for the market to pick a direction so that it either buys or sells. You know what I'm saying? So with that said, you should know by now that, but it doesn't mean you can't trade completely. You can trade, but it's difficult. It's a bit tricky and difficult to get clear and precise direction of the market, right? So it's always advisable to maybe stay away a bit when there's a holiday in the US. It doesn't mean there won't be opportunities. Opportunities will be there, but they're a bit tricky to find, or they're a bit hard to find, right? And another thing is, uh, you should stay away from the market on Mondays and Fridays and Fridays. Why? Basically because of the same reason, right? The same reason that I gave above is because on Mondays the a lot of brokers will be like away from the market because the market is just warming up. It's just starting. People are opening new trades, or they either have running trades from last week, but the volume also is very low, especially in the other sessions. If you are to trade on Mondays, on Fridays, only trade probably towards the US session or during the US session, because that's when the market is a bit stable, and yeah, because of entirely because of that reason, solely because of that reason. So when on Mondays and Fridays, especially in the morning time, depending on which time you are in the world, probably Central African time, my time, this will be from around 7 a.m. all the way up to maybe 1 p.m. That's when the market is a bit unstable, right? From time, morning, how do you write morning? Like that, morning time. This is from your 8 a.m. up until late afternoon. Not early afternoon, right? Morning time up until maybe around 1 p.m. or so. 1 p.m. That's when the market is very unstable on Fridays and Mondays. Very unstable because of low volumes, right? We can even go to the chart, and I'll show you that in a jiffy, so that you see what I'm talking about. Low volumes or lower liquidity. Why? Because a lot of traders are just from the market, are just from the weekend, especially on Mondays and on Fridays, like today. Today is a Friday, right? So especially around this time, the market will be a bit unstable. You'll be trying to buy and the market just goes for a sell. You try to sell the market because of that reason. So if you were to look at the market, let me just show you something. Like you can see right now, do you see? There isn't a clear, this is gold. There isn't a clear direction on the market. Like this candlestick was bearish, this one is bullish, that one. You see what I'm saying? So basically here, if you look here, this is bearish, this is bullish, this is bearish, this is bullish. And this is like the first, this is an all-time high for gold. This is the first time gold has reached this level ever in its history. And we can see that gold is still pushing up and up and up and up. Yeah, but there should be a dip pretty soon. So what I'm trying to say here is every time, if you were to even go back to Monday this week, you'll be able to tell, Hori, to tell that today is the 28th, right? Today is the 28th. So Hori, Monday it was the 28 minus 5, it would have been the 23rd. Is it 23rd or 24th? So today is the 28th, 28th, 27th, 25th, 20. Yeah, it would have been the 23rd. I get it. 23rd of March or 24th, something like that. Or let me just confirm. Today is the 24th. So yeah, Monday was the 24th. Today is the 28th. Monday was the 24th. Sorry, Monday was the 24th. So if you were to look at the 24th, you will be able to see what I'm talking about. Let's see gold on the 24th, especially morning time. You see, this would have been morning time. Do you see? This would have been morning time here. This would have been morning time. Do you see what I'm talking about? If I was to just open up a bit there so that you see what I'm talking about, this is what I'm talking about. This is like from around 8 in the morning. Yeah, you can see it was a bit bullish, but look, it's not consistent. You see, this is 24th. But here it was a bit bullish. But as you can see, there was a bit of a direction there, but this is a chance, this is once in a lifetime chance. Or because obviously the market, sometimes you can have opportunities, but hella you can see here it started to do a buy sell, and then the direction started showing nicely during the US session, or it's gonna sell for some time, right? Prior to that, it would have been chaotic. But yeah, I guess you understand what I'm trying to say. If we are to open anything, you'll be able to see. But yeah, if you are a good trader, you'll be able to spot some opportunities, like here and there. As you can see here, I think that's about it. There's usually less volume in the market, and things get clearer during the US session. And it also applies to some days like your Monday, Tuesday, Wednesday, and Thursday. Sorry, your Tuesday, Wednesday, and Thursday. But it's mostly prevalent on Mondays and Fridays to say just stay away from the market, especially during the morning session, and like morning session, like European session, and start trading towards the US session, or when the US session, or just after midday, which is your